Hello and welcome to ICRA Ratings Informative Session. I'm your host, Javela Macalalad, and I'm delighted to have you with us today for what promises to be a powerful and eye-opening conversation. At ICRA, we believe opportunity isn't just a matter of location. It's about preparation, visibility, and trust. This session is part of our mission to empower African corporates and institutions by demystifying how investors actually define opportunity and, more importantly, what they look for before deploying capital. Today, we'll be exploring how to become investment ready, the role of credit ratings in driving funding, and addressing the common challenges faced by the SMEs and large corporates across the continent. Joining us today is Mr. Musonda Chipalo, a highly respected voice in the investment and financial advisory space with deep insights into both international investor expectations and the realities of doing business in Africa. He brings a wealth of knowledge on how institutions can, structure themselves to become truly investable, not just in theory, but in real-world capital markets. Hello, Mr. Chipalo. Welcome to the session. We are honored to have you with us today. How are you?
Great, thank you. Thank you for having me.
Thank you, Mr. Chipalo. Would you mind sharing with us a brief introduction about yourself for our viewers and listeners, for them to know a little bit about you?
Wonderful. Thank you. So the name is Musonda Chipalo. I'm currently the CEO of a company in Zambia called Growth Investment Partners. It is a subsidiary of British International Investment, where we are targeting small and medium-sized enterprises to see how we could provide flexible long-term funding as well as advisory services. My background is in international finance corporation, where I spent over 20 years working mainly in manufacturing, agribusiness, and services across several geographies.
Wow, your background is truly impressive. It's clear that you bring a wealth of experience and deep insight into the world of finance. So I won't be prolonging. This much. I think it's good for us to dive directly to our main topic today, which is educating African corporates and institutions on what investors perceive as an opportunity. So we have prepared, Mr. Chipalo, a couple of questions. So let's begin with something fundamental, the definition of opportunity. From your own perspective, what qualifies as an opportunity when it comes to investments? And what do you think are the indicators or characteristics that make an institutional investor to take interest and decide like this is something that we want to be part of?
Okay, so I'll speak specifically around what we're trying to do in Growth Investment Partners. And so, as I said, we finance in SMEs. And for me, what makes a good opportunity from the get-go, I need to understand, does this company fit into our target segment? And can this company support some level of debt funding? So right from the beginning, I need to understand, what are you generating in terms of cash, and what is your debt load? With that, I can figure out, should we continue this discussion or not? If we do, then clearly need to look at the sponsors. Our interests aligned. Are there any KYC, any integrity issues? So you need to do your KYC right up front. And if that pans out well, then you get into the business. Is this a business that we can invest in? Will they pay back the funding? And not forgetting, we are a development finance institution, so what is the development impact on the country? So in a nutshell, that's what we look at.
Right. I totally agree on that, and that's very interesting as well. In your experience, Mr. Chipalo, what are the features or practices that can define an investment-ready corporate or institution in Africa? Like, are there specific benchmarks or governance standards, or strategic elements that attract capital more readily?
So absolutely. The first thing, of course, they need to have done their homework. They need to have a business plan. And by that, I don't mean one well-bound book on the business plan. They just need to have thought through everything they need to do. And once we have a discussion with them, we can figure out and understand that they've done their homework, they know what they want to do, they've done the projections. And then of that, we need to understand, of course, as I said at the beginning, are these sponsors we can work with?
Right.
Is the management in place acceptable? Do they have the basic corporate governance systems in place? So you find most companies in our target segment do not. They just have the various minimum corporate governance. And then financials. Most companies do not audit their financials. It's good to have audited financials. If they don't, we'll make sure at some point they are audited before we invest. So really, those are the key things that we look at. And in terms of doing their homework, of course, they will have done their homework on the market. Where are they in the market? What is their competitiveness? Where do they want to go?
Wow, that's very good insights and really, very informative as well for our viewers and listeners to know. Just to share with you, and I think majority of the rating agency can agree on this with me as well. As a credit rating, one key issue we repeatedly observe is the lack of robust financial reporting. So this often becomes a red flag or challenge in our assessments. So when it comes to SMEs in particular, do you believe that a poor financial documentation is a major constraint, perhaps maybe even limiting their ability to access credit from local banks?
Absolutely, it's a big limitation, especially for a financier that does not have sight of the cash account where you could see the revenue coming in and the expenses going out. So if you don't have an audited financials, it's very, very difficult.
Right.
So for us, absolutely, we need somebody with audited financials. And the thing is, it's not just any auditor. We need to have this audited by somebody that we think we can rely on. And the other thing that you find, just in terms of reporting, the financial management is not up to date. So these companies struggle just to get out some basic information. So if it's during the year, you want first quarter financials, they struggle to get these financials out because their systems are not right. But to your point, the lack of audited financial statements is a big challenge.
That's right. I agree on that as well. Additionally, there's also, a widespread belief that low sovereign ratings prevent local corporates and institutions from raising capital. But in our view, comparing corporate capital demand directly with sovereign demand may not be fair assessment. Do you agree that sovereign ratings are overemphasized in this discussion, or do you believe they genuinely pose a barrier for private sector capital access?
In a way, they do matter because certain financial institutions, especially multinational banks, they first look at the credit rating. And there's a case in point here in Zambia where one multinational bank really downgraded the sovereign rating to the extent that they decided to pull back lending in the country. So they do matter. They also do matter in the sense that ultimately the interest rates in the country are guided by the borrowing of the sovereign. So if the sovereign is borrowing at a certain level in local currency, that is the benchmark. It's like the interest-free rate, the risk-free rate, and every sort of real sector company then has to put a spread on the sovereign borrowing. So they do matter in the long run, but only in those two ways, really setting the floor for the interest-free rate and also making sure that certain corporates, certain banks do not exit the country just on the basis of a low sovereign rating.
That's right. And according to current database as well, compared to Western markets, investment volumes in African corporates are relatively low. Do you think is it due to the lack of visibility where opportunities is, in equity and debt aren't reaching investors effectively? Or is it more than that investors themselves face challenges in identifying credible opportunities on the continent?
I think it's both. It's very difficult to identify good opportunities. You really have to be on the ground or have somebody who's on the ground that can feed you that information. But also, the opportunities are lower. There are less opportunities in these countries compared, for example, in other more developed countries. But there's also the issue of risk, especially in countries with depreciating currencies, where a foreign investor might feel that they might not get back the return that they targeted.
That's right. And finally, can you give us, or what is one key piece of advice that you would offer to African corporates and institutions as they prepare to go to the market to raise capital, whether from domestic or international sources?
So mainly do your homework thoroughly. Make sure your KYC information is clean. Make sure you've expanded on your corporate governance. Make sure your proper management, experienced, qualified management is in place. And really provide a thesis, an investment thesis for would-be investors. Why should they invest in your company? So those are the things I would look out for.
Yeah, I think this is a very good advice that you can share with them. And this can be, most of our viewers and listeners will be considering as well. And as we wrap up this session, I want to thank you, Mr. Chipalo, for such an insightful discussion. And we hope this has provided not only knowledge, but a call of action. If there's one takeaway, it's this. For us with ICRA, investment is not, accidental. It is intentional. Opportunity is no longer about where you are, but it's about how you present who you are. Investors, they are ready to engage in Africa. And to attract it, African institutions must focus on clarity, credibility, and especially in consistency. At ICRA Rating, we're proud to be part of the bridge, helping corporates, financial institutions, and developers communicate their value with their confidence as well. So if you are a company looking to elevate its profile, attract global capital, or simply understands its financial positioning better, we invite you to start a conversation with us. So until next time, stay focused and stay transparent. Stay ready for growth. Thank you so much.